You must be so tired of not knowing where to put your stop loss, not knowing where to get into a trade, not knowing where to get out. So much misinformation on these concepts in the YouTube space. But after today's video, you will no longer be confused. You will no longer not know where to put your stop loss and when to engage with price. What I have on the screen is a crack in the algorithm, that when this appears, you know when to trade. I will show you the specifics inside of this model I have on your screen now, to where if you put your stop loss there, it should be safe. You should never put your stop loss anywhere else. Inside of this, there are secrets. There are secrets that tell you where to position yourself and when to position yourself. Okay? You are not buying down here, or you are not selling down here. You are not buying up here. Right? There is a trick inside of this that I will show you today to sell in the best position possible and buy in the best position possible. So let's not waste any time and get into this. This depiction on your screen in general is a market maker sell model. By the way, reverse anything I'm saying for a market maker buy model. On your screen is a sell model. A consolidation lies down here. What is that? What is that doing? It is building orders. It is building buy orders and it is building sell orders. These are stages of accumulation where when we come back down, we are reaccumulating longs only to send price higher. So any retracement down is only with the intention of sending price higher. This happens here. And then we get to the sell side of the curve, meaning we create a reversal point, a higher time frame key level gets traded into, and we create a reversal point with displacement. We break a low, we rally, and any retracement now higher is to only push price lower and induce people. So you may be asking, what's this secret you've discovered? This secret I've discovered, this secret I've made. Now, I don't want to take full credit for this because these are ICT concepts and these are different concepts, but I am bringing this to you in a full package. What I have discovered is this certain pattern. Now, there is a way to determine when to wait for a high to be raided, right? There is a way to sell above highs and buy below lows. That's what you're trying to do. You are not buying up here. Rather, you are buying below here. We will depict this with a orange box, okay? So when sellers or buyers are trapped, we will depict this with an orange box, okay? So every time you see this orange box, it means participants in the marketplace are trapped. And that is when you enter your trades. Now, where do you put your stop loss? I mentioned at the start of the video, you put your stop loss, you should not be stopped out so often. Where do you put your stop loss? Where a high should not get violated. After a high here. So, you put your stop losses at intermediate term highs. What is an intermediate term high? It is a high that took out buy side liquidity in a sell model, or a low that took out sell side liquidity in a buy model. Okay, so let's not waste any time and dive into an actual chart example over on gold. Gold here. Now, I called this move up higher with my Discord group, my private Discord group. We were looking for buys down here because this is a higher time frame key level, like I mentioned. Now, if you take a look at this, this is a rough depiction of what we had before, just reversed. We have an original consolidation. We have distribution stages here. We have a smart money reversal. We have different accumulation stages. So where do you get in? What are you looking for? Well, we have displacement up here that breaks a swing high. At that point, that is shifting price into a buy model because that is a V shape and we break the high over here. Now, what we are looking for now is reaccumulation of longs. And remember what I said before, when do you get in? You wait for a low to be tagged. Not just any low to be tagged, you wait for a key low to be tagged, meaning what? And this is the secret. This is what I skipped out in the intro, because I want those who stay to learn the actual things. It's just like inside my Discord. Those who stick around and those who actually stay around will learn and succeed. Now, not just any low. Take a look at the time on the bottom of my screen right there. 3 a.m. New York time. Now, the algorithm runs on New York time. You should know this by now, unless you are new to these concepts, of course. The algorithm runs on New York time. 3 in the morning is the heart of London session. So if we create a low there and consolidate, and then we drop down into that low with that sort of drop, what is that drop doing? Why that sort of drop? Why did I mention that? Because that sort of drop induces people. That makes people think this thing is going lower, and it is going lower right now. You have to use retail psychology against themselves. So what happens? When they're thinking that low is going lower right now, what is happening? They get trapped. So remember, our orange box depicts when retail are trapped. They are trapped below here. They are also, in the higher time frame, trapped below here. Why? Because this is a low, this is a low. We rally higher, inducing them to buy, drop it, inducing them to sell. So down here with the orange box, they're trapped as well. But they're trapped down here in a lower time frame. Now, again, you can total soup this, meaning when we run below here, because it's a key low, because we ran below with strength and we ran into a key level being what? Take a look. What is that? That's a gap trading through. If you extend that out in time, mean threshold gets hit, the body's respected. Okay, nothing in this market is random. There's an explanation for everything. Now, people are trapped here, as you can see by the orange box. What are you waiting for now? Well, you could long below here, but you will not be confident in that point. That's reserved for advanced students. That's reserved for really my private students, okay? That's where they are confident enough to get in there because they've got my backing behind the draw and liquidity as well. Now, what should you wait for? Displacement. The exact same thing, guys. It's no different. You are always waiting for displacement because that is a market ready to move. So what is this? Is this a random level? Is this a random up close candle that I'm outlining? No, that is a breaker. Okay, because we have a low, we have a high that ran out another high, gem. Then we break lower and rally back above that high. Now we reaccumulate inside of this breaker block, inside of this up close candle. Why? Because it induced sellers already. So the market is going to be in a rush to distribute those positions. What happens? We trade lower and we rally higher with speed and momentum. That move right there is the source. This of where to put your stop loss is the source. Now, where do you put your stop loss? If you entered on here, you could put it below here. Why below here and not below here? Well, people are already trapped below this. They should not bring the price all the way back down to what? Give retail an opportunity to get out of their shorts. So think about it logically. If they brought price from here down to here and then back higher, retail would have the chance. Those who shorted this breakout, remember, is always logical. This is logic you will not find anywhere else. If they brought it down here, they give retail an opportunity to close their shorts at break even. We do not want that because then we can use their liquidity and take more money out of the market. So what do? They stab it into the breaker block and quickly send it higher, giving retail zero chance to get out of their shorts. Okay, we absolutely send it higher from that breaker block so retail cannot get out of their shorts. Their stop losses are triggered up here, up here, up here, and eventually up here. So that is where you put your stop losses. And if I reverse it for the sell model, if we're looking at this again, if we zoom out a bit, this is also a sell model. You have a consolidation and then different stages of distribution. Now, again, this is very important. The pattern I taught you works when there's equal lows, when we're predetermined to go lower, and we have displacement into the high. So remember, that pattern I gave you at the start is not a pattern for pattern's sake. It's a pattern with context behind it. That's when that pattern works. Okay, and I know a lot of people will watch this video and not take that in. But those who succeed with this will be thinking in that mindset. You have to think, where are sellers and buyers positioned and how would we punish them? So take a look here. Equal lows lie down here. Low, 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 all equal lows. We drive price higher. To do what? To go higher? No. to induce people higher. Remember what I said, orange box. Above there, that's clearly a key high because we moved away from it. We then do what? Do we lag about and slowly climb into this high? No. We send price up in about 4 candles, 4 15-minute candles, or hourly candles, sorry. In about 4 hourly candles, we send price into the high and then we displace away. We then mitigate that in the fair value gap there. Work lower, trade higher, work lower, and we don't waste any time getting into these equal lows. This also happened above there, right? Less clean than this one. This one's really clean. Why? Because it's the start of a new day. Midnight New York, right there. Rally higher, and then we break lower. Okay, so that's another gem I just gave you. Now, really, the private Discord guys will be screaming at me for giving that away, but sometimes I have to give a bit more for those who stay around and watch the videos properly. Now, with this, you will know where to put your stop loss. Again, if you're entering any point here after this on a lower time frame, this high should not get violated. Why? Because people are already trapped. Buyers are trapped in here. They will not give them a chance to get out at break even. They will keep ripping their faces off and sending price lower. And they will see that red go more red, more red, more red, more red, until they're liquidated completely. This is what the algorithm is designed to do. It's no coincidence. So when you're entering here, you know where to put your stop loss. You also know what to wait for. Are you randomly selling in here like I see people do? No. Is this a fair value gap you should trade? No, it's not. Of course it's not, because people have not been induced yet. Have you ever been inside a move, got stopped out, and then price sends in your direction? This is why. This is what's happening. Because you entered before that key stop run, before that deviation. Okay? Now, that orange box, I want to see that everywhere on Twitter. I want to see that in my messages. I want to see you guys taking trades with this. Okay? Now, I'm going to leave you to digest that information and go into the charts and look at it yourselves. When we're in a sell model or we're predetermined to go lower, look at these deviations where we run above highs quick and then drop it even quicker. I'll leave you with that. Now, with that being said, if you do want to learn from me privately, click the top link in my description. It will take you over to a page where you can purchase my private Discord. Now, I give weekly outlooks and daily outlooks in here. Just today, for example, we called gold higher in the Sunday pre-market outlook. Gold higher, dollar lower, Euro USD higher, USD JPY lower, and they all hit our targets. Go into the charts and check yourself. So if you want those sort of call outs, please do click the top link in the description and it will take you over there. If you do want to support me anyway, please do drop a like on this video. It really does help. I know it doesn't seem like it, but it really does help boost the video and boost the algorithm in your favor. Drop a comment with any feedback. Thank you as always for watching, and I'll catch you guys in the next video.